Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. Just a reminder, this is an official recommendation from one of my services. This is a trade that's only for educational purposes and not an actual recommendation. Okay, so let us look at the unusual options volume page on the fantastic marketchameleon.com site. I have sorted it by volume. The biggest one here, as you can see, is Uber. Now, Uber's traded about 3.5 times the regular volumes, over 500,000 options, and the stock is down 9%. Now, what's interesting is that calls have traded 71% compared to puts at 29%. Typically, you see more calls on an up day, more puts on a down day. That's on average. You look at this next one here, IBM, 95% calls, stock's up 2%, for example. So you will see some calls purchased as a potential rebound play, but this is pretty extreme. Like, there's way more calls, even though the company is down. It did miss revenue expectations, which is why it's down. Earnings came out last night. So interesting to see. Now, there could be a couple things going on here. So the company did miss revenues. Its profits were as high as they've ever been, slightly negative. And that's, though, because the company sold off its self-driving unit. So not a recurring thing. However, I think people may be looking at this saying, this is an opportunity to rebound. It went down because it missed revenues. Most of the revenues were coming from delivering food, and that may be going down as we come out of the pandemic and restaurants open and people start going out to restaurants. On the other hand, though, as people start going out to restaurants and going out more, more traditional Uber rides should pick up. So there is the possibility that this is an overreaction and that Uber will bounce back. But we can look and see what some of these call trades were and maybe get an idea. So if we go over here to the Uber trades and again sort by volume. So you can see a couple big trades right off the bat. But this one here, I think, is pretty informative. It's August trade, so about 100 days. The stock was at 49, ended up closing down at about 46 and a half. But at 49, someone bought the 55 calls in August, paid quite a bit, 278. So that's about $3 million. This is a big trade. What's interesting is that it traded well above the ask price, so 278. So this was probably arranged off the floor and then traded on the floor. And in order to keep the market from shooting quite a bit higher, that's the trade was made at 20 cents over the ask price. So in order for the market makers to make some edge and get this trade done all at once, it was done at a higher price. But this is certainly a bullish trade. Someone definitely wanted to buy a large amount of calls and were willing to pay well above the ask price in order to do so. And this thing needs to get to about 58 to break even, which is over, actually based on the closing price, over $10 away. So perhaps it's a bet that the business is going to pick up over the summer, because the expiration isn't till the end of August, as you can see here. All right, so this is certainly the sort of thing you could do on your own. It's simply buying a call. First, let's look at the graph here. You can see the stock had been moving lower and then dropped quite a bit lower after earnings. 55 was around where it was before this decline began. It's been as high as 64, and it would need to go to about 58, around here to start making money. So quite a bit of a recovery, but certainly not unreasonable given where it had been earlier in the year. Looking at that, you can see 106 days to August, so over 3 months. Here is the strike, the 55 strike in August. Over 50,000 of these things traded. So we saw about 11,000 in a block, but obviously a lot more traded in smaller blocks. So this is a very popular strike. I would say that this is quite bullish, right? There's only 1,470 open interest and nearly 52,000 traded. This is definitely a bullish sign to see that much trade at this strike, particularly if they were purchased. And even if they were sold, that might be something like a covered call trade, which would still be moderately bullish. So I would say pretty bullish overall. Buying it is as simple as just buying the call outright. Nothing tricky about that. Now this is the sort of thing I like to do in my Option Floor Trader Pro. I like to buy calls and puts, more calls recently with the market on the uptrend. But if you're interested in that sort of trading, then check out, there's a link on this page, and I will be back next week with more.